we put it out. Yeah, so this weekend we focused on risk management and top-down analysis. And then we also implemented some trades so that way, everything that we are doing, we're practicing it right away, and we're watching out for the results to build our confidence in taking trades. And yeah, Chairman is right. You know, everything that we learned, everything that I learned, at least the foundation, was from watching videos on AkashX Academy. So for those people who are new here, who have not yet been to the academy, or who are not joining the academy sessions or watching some of the recorded sessions, I definitely recommend that we go back there and look at the schedule and see, you know, which educator we want to follow through with, and begin going back to watch a lot of those educator videos. So I'm going to start sharing my screen now, and I'll just kind of show you all what we did this weekend, and I will kind of go back and forth with some of my teammates, and we're going to share the platform this morning. So here we go. So here is my trading view. Please type 77 in the chat if you can see my shared screen. Okay, awesome. Okay, thank you. All right, so Apostle, so please, if you don't mind unmuting, let's get started together. So I'm going to go to the daily chat. If you can see my daily. All right, cool. So Apostle, please, let's look at what's happening here. Let's try to take the team through this whole process that we looked at yesterday on our day chat. What are some of the things that you see here that we can definitely help the entire group identify? First things first, let me just show you guys a list of indicators that I have personally saved on my TradingView. Now, what I use TradingView for is for analysis. I usually take my trade on TradeLocker. Some of you might be taking your trade on MetaTrader 4 or 5. That is fine. TradingView is just for me to do my top-down analysis and to have a better perspective and understanding of what is happening on the market. Sorry about that. So here's what TradingView is for. So that is, yeah, I'm trying to make the screen smaller. I hope everybody's able to make their screen smaller and bigger, like Mr. Mr. Ezekiel taught us the other day.
They
All
are
right.
not seeing that in Esther.
You're not seeing it?
That.
All right, please, can we mute out? Let me see. All right, cool. So yeah, Miss Apostle. So I want to look at, let's look at this together. So this screen right here, what do you see here? Is he there? Okay. I don't see his hand up. All right, Miss Amara. Okay, well, let me do this. So here is what we're doing. So we did our top-down analysis yesterday. And basically, if you can see here that I have two indicators set up already. I'm using the SMC structures and FEG that Madam Faustina introduced to us. Thank you, Ma. And also the Asian range. Those are the two that I'm using, but I have other ones that I usually go back and forth with. So all the other indicators, what I do is I actually make them my favorite so that way, whenever I want to use them, I'm able to interchange without having to search for it all the time. So you can also do the same thing. So it makes it very easy for you to be able to maneuver when you're trying to analyze. And it also makes it easy for you to have all of your tools right there on hand and ready to use whenever you want to. So this is our daily chat, and this is what we discussed yesterday. This indicator right here helps us to actually easily identify break of structure, change of character zones, and the key zones, of course. So this particular daily chat here is showing us what has been happening since the month of April. And since that month of April, we see that the highest point that the market has gotten to is 3499. So since then, the market has not broken that record number. So let me see, 3499, 3501, which is very close to an institutional number. So the institutional buyers were able to push the market up to this point, but then the market has been ranging within a particular zone for the past couple of months, which is what we see in this resistance and support zone right here. And of course, you see that in that time, we've also had a major fair value gap develop up here and down here, and that has not been corrected yet. So the market definitely has a lot of potential to decide whether or not to correct this fair value gap in the next couple of weeks or months. And of course, we have several different opportunities for buying and selling. So this daily chart gives us more of a holistic picture like that. So now you have an idea of where the market is and what is happening on the market, what's the trend. And if you want to use the trend line like we talked about, then you can easily take your trend line, which I also have saved here. I pick up this trend line and I look at, okay, what is happening? Okay, this is where we are. The market has been on an upward trend. So you see, it's been there. So for the past few months, it's been that. So I'm going to take that away just to show us how to identify the market trend. So that's that. And then once we're done with this daily chart, then we quickly move down to the 4-hour chart. And I'm going to go over certain things as well once we go through different time frames, so that way you know what is important for you to pay attention to as you are doing your top-down analysis. So here is our 4-hour chart. Our 4-hour chart provides a more detailed information of what is happening, and it gives you a more up-to-date information as far as, okay, in most recent times, so more like a week or two. So when you look at this 4-hour chart, you're going to see that our break of structure zones have increased. So you can see more break of structure and more change of character as it was happening over the past couple of weeks. So here we see that this fair value gap is the main fair value gap area that we have to focus on. We don't have to go back too far back in the timeline. So this is our main area that we are focusing on, and we're going to see that many opportunities exist for us to either take a buy or a sell. And we'll see the break of structure and the change of market trend. But so far, so good. It still looks like the market is still on an upward trend. So that confirms what our daily charts told us. And we'll look at that very briefly. So let me quickly show you guys a few things that we focused on the group. Remember last week, we were talking about, or a few weeks ago, we wanted to start discussing candle formation. And candle formation is actually a fundamental knowledge that we need to have before we even start reading the chart. Now, there is a video on the Academy. If you go to the beginner and the beginner videos and all those videos, the expert videos, even before you get to the live, the live session videos, there's some videos right there that really gives a breakdown of understanding what the candles are telling us. Now, there is no way for you to read any chart without, first of all, understanding what candle formation is all about, because the candles are the ones that will tell you what is happening. If you want to identify, let's say there is no break of structure indicator, nothing here, you have to be able to read the candles to know what is happening. Let's look at this area, for example, where my cursor is just zoning right here. When you look at this place where there is a change of character, what happened? Let's look at the candle. The candle is able to tell us that this is going to happen. The first candle that started the change of character is this green candle. This green candle right here formed and it went up, and then there was a reversal, and the reversal pushed it down, and it closed right here, leaving this wick right up here. So that wick tells you in a way that, okay, there's a possibility that either a small retracement is happening and we're going to continue upwards, or there is about to be a change of character. But you cannot confirm with this because you have to have a confirmation candle. And when we're looking at finding a confirmation candle to know that there's a change of character happening, we use three consecutive candles to do that. So the first candle has had a retracement and it pushed back and closed here. Then the next one started to form. It also went up, but it didn't get to where the green candle got to. Then it slightly pushed back as well. So that is like, okay, telling us that there is a possibility that there is a change of structure coming. Now, the third candle formed what we call a hammer. A hammer is similar to an engulfing candle. So now you see that there was more of a pushback, and this third candle was very indicative that definitely a change of character is about to happen. So these next two candles that formed green, this is what we call fake out. Institutional buyers use fake out candles to get you to make the wrong decision in entry. So if anybody looks at this and assumes that, okay, here was a green candle, then this one was red, then this one was red, now another green candle, definitely this thing is going to keep buying. You get in there, from here to the next one, this forms a little bit of liquidity. And then you're going to see that once this liquidity was formed and it closed up here, right here, the sell started and then it went to the downside. And this is where this, not only did a break of structure happen back here to break this upward trend, but then it sold for a little bit more to push it to the downward side. So it gave a lower low. And that is how you begin to now understand what your candles are telling you. So it's important for us as we're reading the charts to also use that as a way to study candle formation, because studying candle formation in isolation is good, which we all have to. So I would recommend we go back to the academy to find the candle formation videos, all the fundamental information to really get a grasp on each candle, what it means, and how to look out for changes in the direction of the chart and how they're forming to develop a trend on the market. So we went over that yesterday just to give us an understanding so that Team A could understand exactly how to begin to read different concepts on the SMC as they begin to happen. And doing your top-down analysis becomes easier when you're also able to understand the candle formation and which candle is responsible for what movement on the market. So this is the 4-hour chart, and you're going to see that there is more detail. We can see the trend in the market. We can see change of structure. Now we move to the 1-hour chart. So the 1-hour chart, now you see that, okay, there is a lot more detail. And then you see our fair value gap and our zone of focus is enlarged. And now we see, okay, what we're going to be working with this particular week. And we took all of the considerations based on, of course, the fair value gap was a big consideration. You see, we have two major ones. This one is big, but we can really focus on this very big one because when you look at the distance from where the market is right now, in fact, even where the market opened up yesterday to where this fair value gap is, it will probably take a little bit of time, except maybe there is a news or some type of extenuating circumstances that will cause a major impulsive move down here. But of course, we know that eventually this fair value gap will be covered and it will be corrected. But how do you now determine your entry points since you have to enter the market at a certain time? So when we looked at the closing, the market closing on Friday, we saw how the candle closed and we're able to set up a buy limit to show ourselves that, okay, if the market opens based on the candle formation and where the candle has closed, we probably speculate that this is going to continue in an upward trend, or possibly do a reversal and tap into this fair value gap that we're looking at right here. Now, we can see that as of this time frame right now, it has actually tapped into the fair value gap as we predicted. However, when the market opened yesterday, it went in the direction that we speculated. It went up. It actually hit a certain setup that we put together as a team to test our analysis and to confirm our speculation. It went in and tapped into both TP1 and TP2, and then of course a reversal happened. As we predicted, it tapped into that resistance, which I will show you on the 5-minute time frame. I usually skip 15 minutes to go straight to the 5-minute time frame. Once I look at 1 hour time frame to identify 3 things: where is my fair value gap? Where is my change of structure happening? And where is my break of structure, change of character and break of structure? Once I have those 3 components within the zone that I am trying to take a trade in, it gives me a lot of confidence to move forward with my lowest time frame, which is 5 minutes, to see what I need to do. Some people will take a trade on the 1 minute. That usually works when you follow Arabella, who is a major educator. I highly recommend her, but her strategy is scalping. She will take her trade on the 1 minute time frame because she wants to take those 20 pips, 20 pips, 20 pips. And it has to be done when the timelines are very short and close, so that way you do your sniper entry and you exit, entry, exit. All right, cool. So let's go back to the 5 minutes time frame. I hope you're tracking with me, everybody, this morning. I know it's super early. It's a Monday morning. Please type 77 in the chat if you're following and tracking with me. And if you have any questions, so far so good, please raise your hand so that I can quickly address it before we move on too far out. And maybe I don't want to lose anyone, and I don't want our time this morning to be wasted. So if you have any questions, you can raise your hands and we can quickly address it. Thank you all so much. So now we are down to the main part. This is where now we want to see, how do we enter the market? What are we going to do? What is this particular time frame offering? What are some opportunities that it is presenting to us? There are quite a few opportunities, even like where the market is right here. Like I said to you guys, when the market opened yesterday, we speculated, we put a buy limit in place. Now, let me explain why we did a buy limit. So like we were talking about on the team, a buy limit helps you, especially as a new trader, to really set up your trade with confidence. That means you set up a pending order. Once you have done your top-down analysis, rather than sitting down in front of the charts and trying to see where to enter, how to enter properly, it's better for you to use what we call the buy or sell limit. That means you set up a pending order. You put your stop loss number 1. Stop loss is so important. I heard my mama, Dr. Dupe, talk about, oh, somebody blew their account again. Please, it can be very painful. If I tell you I've not blown accounts, that would be a big lie and the devil will be smiling. But me, I'll put the devil to shame. I have blown accounts. But one thing that blowing an account has taught me is I have to be very conservative and mindful of my risk management. My risk management is also set up along with my trading plan. So if we don't have a trading plan, that is your personal trading plan. No, it's not chairman's trading plan. It's not Dr. Dupe's trading plan, nor Mr. Ezekiel's trading plan. Everybody's trading plan is their own personal SOP, standard operation procedure, for you to come to this training and for you to enter the market on a daily basis. Your trading plan has to consist, first things first, risk management. Your risk management is, what is it that I can afford to lose? Yes, maybe you might be able to afford to lose 10%, but you have to look at the size of accounts that you are working with as well. How much can you lose to allow yourself the opportunity to stay in the market the longest? Because once you blow an account, especially if you're trying to use the prop firm strategy, honestly, it becomes a bit discouraging for you to even know where to start from, because now you either have to look for a self-funded account, or you now have to try and start your challenge all over again. So it's always recommended that your risk management is the number one thing that goes on your trading plan. So, of course, we highly recommend, and even AkashX educators, Rich Vandiger will recommend it, Joel, everybody recommends this strategy. Calculate 1% of your account. And there are tools on AkashX that allows us and helps us to do that. You can plug into those tools. When you go on the Academy, I know the website has been updated, so you just need to get back there and familiarize yourself with how to find these tools. All of the tools are there that you can use to calculate your lot size. And the lot size will also help you to determine, okay, if this is what your lot size is, then your stop loss also should be a part of your, then your stop loss will be automatically set. So for example, chairman calls a trade and says, buy gold now. Okay, good. That's a good one. You get in there, you buy gold. But as soon as you get in there, even before chairman will give you parameters, and I know a lot of us are waiting, what are the parameters? Where is stop loss? Where is the entry point? Okay, once you enter the market, it's so easy. Based on your trading plan, without anybody setting parameters for you, you can go in and set up your stop loss based on your trading plan, because you already know 1% is what you're willing to risk. If you're on a $10,000 account, 1% means that you don't want to lose more than $100. Now you go in, once you do that, you put your $100 there. So that automatically sets the limit for that account. That whether chairman calls a stop loss, whatever he calls, you on your own by yourself for yourself, you're advising yourself, say, me or Inconsola, I will not lose more than $100. Whatever this trade is doing today, you put it there and you look. Now, when it comes to trade profit, Rich Vandiger will say, look, trade profit is not important. You can leave trade profit open, because guess what? If the market is in profit and is going, it can take you to the moon and beyond. You know, you're never at risk when you are when the market is in profit and your trade profit is not set. So let's be very mindful that the most important parameters to set is stop loss. The reason we do take profit, of course, is to say, okay, once you get to this point, you take profit, you get out, of course, and that is just for you to manage your expectation, and it also helps you manage your appetite on the market. Because sometimes if you don't learn to develop the discipline of managing your appetite, saying, enough is enough, I don't chop belly full, and you want to keep going, it allows you to create a lack of discipline towards your risk appetite. So that is why take profit is important. But I'm just saying it two ways now, that one parameter is more important than the other one. And the most important one is your stop loss. That is what keeps you in the game. That is what allows you to be a professional trader. That is what gives you the opportunity to go back every single day, win or lose, to keep on doing this thing and developing mastery and proficiency. So stop loss is the most important thing. And of course, after stop loss, take profit. That allows you to control your appetite. So it also helps you to maintain your trading plan. So if you say, okay, my trading plan is I build up my account, just like the compounding that we're doing. We build up our account 1% every day. So that trading plan, your take profit to be 1%. You build it up, you build that discipline, you get in, you get out, you get in, you get out. So that's what we're doing. So I just wanted to kind of chip that in there. So let's look at this right here. So now we'll see that different fair value gaps are being formed as the market has been going. And there's been a huge break of structure within the last couple of hours. Once this happened right here, there was an impulsive move. You see this impulsive move within this Asian range. Wow, there was a major impulsive move while men slept. While we slept, the market was doing what it was doing in the Asian session, and it brought the market down to 3367. That's amazing. So now the market ranged a little bit in here. And where we are right now at this point, we see that, okay, at the lowest, the market is at 3354. So what if we wanted to consider, okay, how do we enter this market? What are we supposed to do? We see that right here at the very end, there is a fair value gap that just opened up. So this is our opportunity. But before we even consider it as a major opportunity, what else is available? Yes, the fair value gap is there, but we also need to see the break of structure. The break of structure will help us to know, okay, where is an order block looking very good for us? So we have an order block right here below. Let me see if I can get, there's a tool. Okay, don't let me waste our time with that. So we have an order block right below this fair value gap. So of course, by the rule of thumb, our fair value gap is, when we see a fair value gap, we definitely want to divide it by 50% to identify our discount and premium zones. So where this red line is actually almost 50% of this fair, yeah, it's about 50% of the fair value gap. So we see that as discount zone is here, and even the candle has tapped into that discount zone. So if we wanted to set up for a buy, then we can actually wait for it to see if it goes past it and crosses down here. So we can actually wait for the market to get here at 3354 and see about setting a buy limit or setting up a buy, entering the market for a buy to possibly go up a few pips and try to cover back up what is, I mean, the fair value gap is being covered already, but to try to go back up. So basically, that is how we sort of determine. Now, let's look at setting up stop loss. So we're not going to take any setup right now. I just want to show us just for the purpose of demonstration. So for example, you want to enter this particular space and say, okay, you want to set up a buy limit. So now, if you wait for the market to tap in here, and you see that, okay, it's tapping in here. So if it goes beyond this point to the downward side, then that tells you that there's probably going to be a continuous bearish move. But then if it taps in here and respects this support and starts to reverse, then it tells you that it's respecting this zone, and then there's going to be a push back up, so you can actually enter in for a buy. And how do you enter in for a buy? You set your buy limit, which is a pending order, at 3354.40. And then if you're doing a buy limit, and then your stop loss, you want to go a little bit downwards to see your stop loss. How do you set your stop loss? You definitely always want to set your stop loss away from where you're taking your entry from. Depending on the position that you are taking, I always recommend 20 or 30 pips down if you're taking a short position, and then maybe about 40 to 60 pips if you're taking a long position. Now, what is a long position? A long position is whereby you want to start at your entry, and then you have TP1, TP2, TP3, TP4, maybe, which will take you up to from 3354 up to, let's say you want to now get to this point at the top of this candle right here, 3365. That's a lot of mileage to cover, especially when it comes to gold. So you want to set your stop loss. Why do you set your stop loss like that? In a short position, your stop loss about 20 to 30 pips out keeps you in a safe place, and it ensures that you stay in the game, just in case the market reverses and breaks this point to the downward side. So at least if you're 20, 30 pips out, it allows you to stay there and to kind of watch your trade and see how you can definitely get your profit. And then if you're taking a longer position, of course, with reversals and things like that, based on the size of your account, you're able to keep yourself in the game for longer, so you are not suddenly stopped out with liquidity grabs and things like that. So that's why your stop loss is set with that consideration. Now, the team and I looked at stop loss, and then we also talked about breaking even. If you've set up your trade for take profit 1, take profit 2, you always have to break even after TP1 has been hit. Break even means your stop loss is automatically moved to your entry. So if there's a reversal, you end up with zero, but you don't end up losing money. And if there's no reversal and it continues on, we also set up what we call the trailing stop. The trailing stop on Trade Locker, we were able to show ourselves what it looks like yesterday, is just a parameter that is set that allows you to trail your stop. What does it mean? That means your stop loss moves as your take profit moves up or down. So if you're in a sell, it moves down with it. If you're in a buy, it moves up with it. Now, once your take profit stops, your stop loss will stop as well. So in case there is a reversal, your profit that has been secured is secured and it's never lost. It will take you out at that point where the trailing stop has stopped. But you get to set the parameters for the trailing stop. So again, your trailing stop will also be the same parameters that you put on your stop loss. You don't want to lose more than 1%. You set it up that your trailing stop ensures that you don't lose more than you are set up the distance between your stop loss, which is your trailing stop, and your take profit is 1%. So that way it helps protect your already secured profits and it keeps you in the market at a very safe place. So those are some of the things we looked at yesterday. Because of the way the market is, definitely right now, we have to kind of watch it a little bit. And of course, it's a Monday morning. So usually it's not always the right time. I don't know what chairman feels and what he's looking at on the market, if he wants us to call a trade or not. But that's all that we shared on the group yesterday. And we were just trying to help ourselves to reinforce our SMC knowledge. And we looked at all of that. In fact, when we took our demo trade yesterday, which went our way, it doesn't mean that it's always going to be like that. Sometimes it might not be. Remember, we are speculators in the market. So if anybody calls a trade and it doesn't go your way, it's fine. We're all speculators. We don't determine the outcome of the market. If it goes the way they predicted, fine. If it doesn't, stop loss will help you manage that reversal or that negative outcome, or the lesson, as Madam Champepe always calls it. It will help you manage the lesson. So that's all I have for us. And of course, if you want to go the extra mile, you do the DXY confirmation and you go to the DXY. The DXY will always be the inverse of what this is looking like. So this chart is this way. The DXY is going to be on the opposite side. Like this break of structure will probably be at the top, and all of these FEG gaps will be in the opposite direction. So that tells you that you are analyzing your chart correctly. So that's it. If anybody has a question or something that they want me to specifically look at real quick before I turn it over to my wonderful partner, Mr. Ezekiel, that's pretty much all we discussed in the team this weekend. Thank you all so much. Mr. Eric, you're here, sir. Okay. All right. Okay, Mommy Esther is here as well. All right, cool. Thank God. My teammates
I see your hand up, Eric. Okay, they're your teammates.
Yeah, they're my teammates. So please, I want yeah, anyone that has anything else to add, please definitely on mic, and let's yeah, let's do this. Is that a question or a contribution? I think that is, I don't know, I see. I'm not sure. You can open your mic and speak up so that I can know what's going on.
Thank you very much, Dr. O. This was, again, expository. Please give it up to Dr. O. Give her a super 2. Let's celebrate Dr. O. Let's celebrate Grace in the house. She's done amazingly well. And I know some of us have questions. If you don't want to type, if you don't want to talk, please type it in. I love the stop loss that she talked about. I hope these people are here on this call right now who had the issues with stop loss. When Mr. Ezekiel comes in, Ezekiel, please, I can see 2 or 3 of them here. the Blow account, maybe here that they even came to join again today is Grace. So if you want to really go on the chat, like you want to use your MetaTrader or something, or Trade Locker to show how to actually put it in so that they see. I don't know how else to show them, but let's make it known to them so that they see what Dr. Osho now has carefully explained how to put your stop loss. I think the problem is trainers call trade and they don't put stop loss. You just execute without putting stop loss. So I would like you to put stop loss first before you hit the send button. If that's, don't want to mention names, I can see, but please, if we want to do that, it will help. Yeah.
Somebody asked if that they didn't see the change of character on the 5 minutes. So you have to understand that the 5 minute time frame is like a lot is happening. So it's more condensed. So you can see the change of character here, when this impulsive move happened. So there was quite a bit happening on the charts from the time the market opened yesterday. It's been a lot of impulsive moves. And it's so interesting because the Asian session is not always this active. So this week we must be ramping up to some activities. Maybe it's the partnership of China and America that is causing all this. But anyway, so yeah, so you see the change of character happening back. I mean, because this is the file. I'm kind of going back to show somebody typed a question in the chat that they don't see change of character on the 5 minute time frame. 5 minute time frame gives you more details, so you can see this wonderful patterns that have been formed. And of course, change of character to the downward side happened here. So basically, you see this right here. And yeah, so that's why. So when you look at this chart on a 5 minutes time frame, this is possibly maybe the last two to 3 hours, not even too far out. So it's not like too far out. So that's why. All right, cool. And Mama was saying set your stop loss first, please. That is so important. Please, guys, let's be very, very mindful of that stop loss. Just set that one first. Anybody that calls trade for you, no matter how that trade is looking, once you enter, immediately go back and enter your stop loss. Even if you don't enter take profit, just enter that stop loss, let it be there, and then let the trade start running. Use it based on your trading plan, and then that will give you peace of mind to know that, okay, everything is happening. See, like I said, look, it broke that pattern, so now we're going on the downward trend. So see what we just talked about, guys. I told you that once if it breaks this point, then we know that we're going in for more bearish moves. So now there is a bearish move that is forming. It's broken it. So now it's also going down. So now at this point, that's why I said we can't enter the market yet, because we need to watch what happens when it gets to this point. So now that it's broken to the downward side, chances are that there's going to be a bearish move down, maybe a couple more pips. And anyone who is scalping might want to enter this position, just do a quick sell and then just stop. Or then it's also reversing. So it just depends. So that's it, people. Thank you all so much. Mr. Ezekiel, sir, over to you, my wonderful partner. God bless you.
Hello, good morning, everybody, and welcome to a new week. Please, Dr. OJ, that's a huge value. Please type value on the chat box, everyone. Type value on the chat box. Type value. Please do that quickly. I'm an advocate of 60 minutes. I don't like to exceed that, so it gives me a sense of value for my time. Please type value quickly so we can round off.
Hello, is it?
Yes, sir.
Okay, how are you?
I'm fine, sir. Good morning, sir.
Yeah, morning. Okay, hold on a bit. So everyone on the call, there's actually something that has been of concern to me. Look at this call. At some point, we're 80. Now, if you take a census of this 80, you discover that a vast majority of these 80, their accounts are inactive. Their accounts are inactive. What that means is that those vast majority of people, they lack the fundamental training. They don't have access to the fundamental, the basic training. Like I said at the beginning, that's taking somebody from who has